Hello and welcome back. Today is April 20th. It is 9:36 p.m. and right now we're looking at Netflix Inc. on the monthly. Okay, so you want to trade Forex or you want to trade stocks. So let's take a look at what's been happening with Netflix on the monthly. Now, if you're familiar with Netflix, the streaming service, you can see how it's been gradually increasing in momentum all these years over this time. And then, as of late last year or the fall of 2021, we had a nice drop in momentum or a drop in bullish momentum. All right. And so price currently sits at 325.35, 7 days, 16 hours left on this candle. And we are looking to see what's all the fuss about. So if you've been on Twitter or on anything streaming lately, there's been a lot of discussion about the increase in volatility in the Netflix market. And I just want to discover with you what the price action is doing. All right, so let's just go back here and look at 2021. So we have a lot of consolidation here, up and down movement. We finally received this breakout, retest of the structure, and then finally a massive breakout into this upwards momentum that lasts until October, November of 2021. We have a peak or a high of 799 cents, $700.99 on Netflix Inc. on the weekly as of November 15th of 2021. And then we gradually have this breakdown. So we've had quite a bit of a breakdown. Let's draw a fib here so we can get a better understanding of what we are looking at. All right, so it looks like price is kind of consolidating and oscillating between the 23 and the 38. Right now we're neutral between this zone. And if we drop down to the daily, it reflects that. All right, so if we're looking at the weekly on Netflix, let's just take a look at some of the news that we have here on Netflix. Let's just take this one. Let's do this one. This is all from my previous video on Square NX. We did some analysis to look at price action and potential entries that we would be interested in. All right. So it looks like it's a new era for password sharing. I really just wanted to take a look at the news. So, if they're cracking down on password sharing, this is something that we could potentially see that could increase the price or increase the momentum. And maybe that's, a reflection of what the higher volatility that we've seen today is. They're really solidifying the deal with this. Netflix is planning to end its DVD by mail service. Let's take a look at that. If you remember, Netflix is how it started, these DVDs. I know it says DVD.com, but Netflix actually, I want to say it started with the DVDs by rental, and then there was like the online streaming. How I first heard about Netflix in 2010, 2011 was the DVD mail service. So quite a bit of time, about 13 years since then. So Netflix is poised to shut down the DVD by mail rental service that set the stage for its trailblazing video streaming service, ending an era that began a quarter century ago when delivering its discs through the mail was considered a revolutionary concept. Plans to mail its final discs on September 29th. Netflix ended March with 232.5 million worldwide subscribers to its video streaming service, but it stopped disclosing how many people still pay for DVD by mail delivery years ago as part of its business steadily shrank. The DVD service generated $145.7 million in revenue last year, which translated between 1.1 million and 1.3 million subscribers, based on the average prices. Oops, there's that. Paid by customers. Video streaming service has been slowing down over the past year, prompting management to put more emphasis on boosting profits. Focus may also be contributed to the decision to close an operation that was become a financial drain. The DVD service was once Netflix's biggest moneymaker. As I mentioned, this is something that I supported in 2010, 2011. But before Netflix broke it off from video streaming in 2011, the DVD by mail service boasted more than 16 million subscribers. That number has steadily dwindled, and the service's eventual demise became apparent as the idea of waiting for the U.S. Postal Service to deliver entertainment became woefully outdated. All right. So the service history dates back to 1997 when Netflix went to a post office in Santa Cruz, California to mail a Patsy Cline compact disc. So DVD by mail. All right. So with just over 5 months of life remaining, the DVD service has shipped more than 5 billion discs across the U.S., the only country in which it ever operated. And ending echoes the downfall of thousands of blockbuster video rental stores that closed because they couldn't counter the threat posed by Netflix DVD by mail alternative. Such a major theme here. If you remember Blockbuster and like having to go, and sometimes they might have the movie, sometimes they don't. Even subscribers who remain loyal to the DVD service could see the end coming as they noticed a shrinking selection in a library that once boasted more than 100 titles. Some customers also have reported having to wait longer for discs to be delivered at Netflix closes dozens of DVD distribution centers with a shift to streaming. So it looks like they're amping up their streaming capabilities. And I'd like to see how that could be, integrated or implemented or infiltrated by the metaverse as more interest and intake is kicking up about metaverse and augmented reality, mixed reality, virtual reality. I would like to conjecture or speculate that Netflix isn't a company that's going to stay behind. A lot of these companies, they want to stick around for, 100 plus years. That's what they, have in mind, or at least the next 10. So in order to remain competitive in these markets, I think that Netflix and the metaverse might have some corresponding interests. All right, so let's hear we've got from Yahoo Finance. Let's see what we've got here. So Netflix misses subscriber estimates, reveals password crackdown to hit US in quarter two. Netflix reported mixed first quarter results on Tuesday, missing Wall Street subscriber estimates while beating analyst expectations on earnings per share. All right, the revenue was $8.16 billion versus the $8.18 billion that was expected. Earnings per share at $2.88 versus $2.86 expected. Subscribers is at 1.75 million versus the 2.3 million net additions expected. So it looks like the stock initially fell as much as 12% after the news release, and then it saw shares pair losses as investors digested the report. And it looks like the CEO stepped down from his leading role at the company. Earnings and revenue projections disappointed after Netflix revealed it anticipates earning 2.84 per share on 8.24 billion in the second quarter, below Wall Street forecasts for earnings of $3.05 per share on $8.5 billion in revenue. Profitability, margins, and free cash flow surpassed expectations as the streamer cut its content spend by $1 billion in the quarter compared to the same period last year. The company, which raised its full-year cash flow projection to $3.5 billion from $3 billion, said it would stay around its $17 billion annual content spend through 2024, but added there's more room to grow. As we re-accelerate revenue, we see a lot of opportunity to grow into that viewing, engagement, and business opportunity ahead. So Netflix now has a lot of cash, free cash flow. This is an image from Getty Images on the cash flow that is available for Netflix to spend, and it's raised substantially in quarter one of 2023 to $2.1 billion. All right, the results come as investors eagerly await updates regarding the company's recently relaunched ad-supported tier, in addition to its controversial crackdown on password sharing. So Netflix broadened its crackdown to include countries like Canada, New Zealand, Portugal, and Spain, in addition to the test countries of Chile, Costa Rica, and Peru. Revealed it's planning a broad rollout of the policy this quarter that will include the U.S. Added a basic with ads tier, comes at $6.99 a month, and serves as a complement to Netflix's existing ad-free tiers. Standard at $15.49 and the basic at $9.99 a month. It says that the tier now has about 95% of the same content as ad-free plans due to new licensing deals. Given current healthy performance and trajectory of our per-member advertising economics, particularly in the US, We're upgrading our ads experience with more streams and improved video quality to attract a broader range of consumers. So it's shuttering its 25-year DVD rental division, explaining it's hard to provide the best service as the business continues to shrink. So less and less people are wanting to use the DVD service, and they've added a new tier for streaming at a lower price of $6.99 a month. And so this is something that we can see that was reflected in the news outtake of today. With about 15 hours left on the weekly candle markets, it is aftermarket, the markets are closed. But I just wanted to take a quick look and see what was the conversation that was happening with um, Netflix today as it experienced an increase of volatility and momentum and became trending online on Twitter. All right, so that concludes this video. If you have any additional questions or comments, feel free to drop them below in the comments and we can take a look at other stocks that you may or may not be interested in. But this wraps it up for the Netflix portion of stocks that you may want to trade that you want to look into. And I will catch you on the next one. See you soon.